let's talk about fintech. So, we're coming off of, the pandemic years. Fintech was going gangbusters. Everyone was working from home. They were using lending apps and payment apps, and now, times are pretty tough. Every SoFi is down, PayPal's down. The markets are tough. It turns out Frank lied to JP Morgan. They don't really have 4 million customers. I don't know if you saw that story. So, what do you think is going to happen over 2023, 2024? Do you think that these incumbent banks, the big financial institutions, are going to be able to take back some of the real estate that they ceded to the fintech companies, or do you think you'll see things swing back the other way? Why don't we start with you, Jillian?
Yeah, I think one of the most interesting things that happened in the pandemic is that most people learned what fintech was, honestly. Before that, it was probably just the coasts and people in tech that even had heard of 90% of the companies other than a Venmo or maybe Cash App or something like that. And so I think that we're still from if we're thinking about consumer standpoint, and again, some of these banks, still in rather early days from that standpoint. I think that what we're seeing right now is that a lot of these companies have to fix their business models, and that a lot of the ones that went public probably should not have, especially if you're trying to compare a basic neobank to a JP Morgan, for example. That doesn't necessarily work. I was looking at a graph at the end of last year that showed kind of app downloads for U.S. fintechs, and from 2017 through now, even with COVID, the growth rate is still basically the same. So even through the COVID bump, that has continued. So that demand and the desire from the consumer is still there. And I think even with Black Friday, Affirm was helped drive this most recent Black Friday to be one of the highest retail days that we've seen in a number of years. So a lot of the usage is still there. I just think from the actual business standpoint and some of the fundamentals, those kind of need to be reshifted. And to be fair, the banks themselves are not dumb. And so I do think that they have awakened and continue to wake up to things that they can do better, and are thinking a lot more about buying them or how they can compete. And so I do think that the fintech companies are going to need to reshape themselves in a lot of ways, which will take some time. But I think that we're still kind of in a lot of early innings when it comes to some of these fintech innovations.
What I would add to that is I think that there are certain sectors of financial services more broadly that are going to have a brutal year ahead. And that's not just for fintechs, but also the big banks. And that in particular is lending. So I think that we will see very large losses coming through in lending. You see a couple days ago, even the large banks announced that they were doubling their loan loss reserves because as more, unfortunately, it's like a triple whammy as more consumers lose their jobs, interest rates and cost of capital is higher. And then on the fintech side, we have more fintechs that have not managed through a downturn that have really kind of started lending in the last 6 years. So I think lending is going to be absolutely brutal. And that's where I would expect to see the most casualties. But then there are other areas of fintech that speak to some really big opportunities. And so I don't know if you want us to cover opportunities now or later, but I'm very bearish on lending. I'm pretty bearish on neobanks, small business, but then there are some areas of opportunities. On neobanks, the thing that I worry the most about is that the majority of them have very small average actual deposit balances, and you need deposits to function as a bank for lots of different reasons. For it's core to the business model, and then on top of that, unfortunately, there's more neobanks have employees that are in tech that are impacted by layoffs. So I think that's an area where I would predict that we would see meaningful consolidation in the year ahead.
And I would say I'm with you in the US. We invest at Lightspeed pretty globally. I lead a lot of our Latin America investments. And in the US, the part of not having a lot of deposits, we have lots of other solutions. The traditional banks did catch up in terms of digitizing their solutions. Everyone started doing mobile check deposits during the pandemic. But I think if you look around globally, different products of the consumer fintech stack work really well in different places. The US actually has one of the highest adoptions of fintech in wealth management services, whereas in Asia, they are actually much higher in lending in their consumer fintech services. And so it just depends which country you're in, and I think we're gonna see a lot of more, if we go out of the pandemic, tons of fintech adoption into zero interest rate environment, ZIRP, sometimes they call it, and what that's gonna mean for consumer fintech.
Mercedes, so you mentioned the global, the global outlook. The U.S. has always just been way behind the rest of the world when it comes to fintech. We're still writing checks here. So what are you seeing? Maybe we could talk a little bit about the regulatory environment in the U.S. On the one hand, you're seeing some states sort of carve out regulatory frameworks for crypto already. On the other hand, there are some looming, bills around the credit card competition stuff that sort of creates question marks for how you can make money in fintech. Do you want to just address regulation? I don't know who would want to go on that one.
I would say just in the regulation, to your point, the U.S. is distinct in that we do have a lot more power in the states than in other countries, and so we do have this kind of little balance and dance that goes between who's controlling regulation for which products and which jurisdictions. And I think that the U.S. is focused on at a national or federal level on crypto, on wealth management services, or it's just the Secure 2.0 Act. I don't know if people saw it. It was a really big sweeping change to a lot of retirement policies. And so there is work happening, but I think a lot of it is going to be still at the federal level focused on consumer protection. And so if lending blows up this year, I think we'll start to see more focus there too, which it is blowing up.
I will say in terms of the U.S. being behind, I think it really does depend a little bit on which areas of fintech. I completely agree in terms of a lot of payments, we use a lot of checks. I think if you look at China, they skipped basically from cash to digital payments. Countries in Africa have been using mobile money for decades at this point. But if you look at, especially when you're talking about regulations, if you look at Mexico, I think it was end of 2021, they basically changed the definition of how you can use banking licenses that shut down basically all the neobanks and banking as a service companies there, abruptly. And so I think it really does depend on region and country and the stability of some of the countries and things like that. And candidly, probably who's making money off of it to see exactly how stable some of the regulations are. And I think in the U.S. it's maybe moves a lot slower. And I think in the last panel they were talking about the idea that crypto wants regulation, and I feel we've been talking about crypto's getting regulation for the last 6 years and nothing's happening. And so I think we move a lot slower in that, but at least there's once we have it, there's a little bit more certainty around it.
I want to ask you a question about talent. The boom years with low interest rates, it was pretty easy to attract great talent, and there were some great products built. What happens now? Now that we're in tougher times, and you have hot areas like AI, we're talking about that in the last panel and probably the next panel. Do you think fintech's going to have a problem holding on to talent? Are you talking to your portfolio companies about that?
It's been a great time in terms of both new company formation, where people, some of the great folks that are maybe losing their jobs or getting together and starting companies or joining companies. It's the thing that happens in a recession, is that talent flows to where the best opportunities are. And so what I would say we have seen in the last 6 months is significant improvement actually in the talent picture for fintech, where it's easier to get access to the best talent. So positive would be my my point. I also would say that in a downturn, you're more likely to get entrepreneurship and formation and founders working on really, really hard problems because they have more time to do it.
And just to add to that, I mean, we also are coming off of a season of a lot of IPOs, and so after talent has seen that liquidity, then they are more likely to move on and maybe look for a new company. Have a higher appetite for risk or to start something. And so actually, I think I would agree the talent situation is pretty good right now.
I also think with fintech, given it's regulated, you kind of want people that understand fintech and that have some sort of that knowledge. And so I think obviously you can have people from other sectors and whatnot that can learn, but usually there is some sort of institutional knowledge that they'll have. And so, as Mercedes said, you have people coming off of IPOs and whatnot. But there's also some people who, like I've seen this a lot with like people in marketing, where like it's a lot harder to do fintech marketing because you have a lot of regulations that you have to deal with. You can't advertise the same way, and so you're probably not going to get the same talent that just wants to go to like a random like AI startup that will also want to be at a fintech startup because of that. And so I think there is a little bit of a differentiation because of that.
You touched on this a little bit, Jillian, but I mean, do you think that banks and other, sort of the traditional institutions are getting better at building these products?
You go ahead. I have a strong point of view on this one.
I want to hear your point of view.
Well, okay, so this is actually where I think there's opportunity. This is for fintechs. When I was an operator, I was part of the founding team at Cabbage. About once a month, we would meet with the new innovation arm that has just been formed by Bank XYZ. And they would want to learn how, get ideas and how to drive innovation. My prediction will be that what happens in a downturn, CFOs are going to, and CEOs are cutting back on the areas that are not critical. Prior to this downturn, which companies are the biggest fintechs in the world? If you think about their consumption of fintech, it would be the banks. And so on the infrastructure side in particular, what I think was going to happen is that all of these innovation arms are going to be cut. Those teams will be cut. Banks are actually great at so many things. I would not say they're great at innovation. And so when those arms, the innovation teams, are one of the areas that get cut, it creates significant opportunity for fintechs that are building products that basically add to the bottom line. CFOs are all about profitability. So how do you reduce fraud rates? How do you improve payment reconciliation? And that's where I think there is a lot of opportunity in 2023 ahead.
So I'd agree with that, especially, all the innovation arms completely.
Yeah.
But what I do think is interesting is if you look at like Goldman Sachs, for example, like their ability to build Marcus and how quickly that grew was arguably a fantastic fintech. Grew a lot faster than a lot of standalone fintechs. However, now you see like they're basically shutting it down because for the bank, it was not profitable. It did not work for them. As much as it grew, and if it was a standalone company, it would probably be deemed rather successful, it did not work for them. So I think there's like this balance where I think they can be very good at it. They also actually Goldman didn't have the distribution because they didn't have a retail arm yet, but they can have a really good platform and ability to grow. However, it doesn't necessarily always work with their business and how they need to operate as a large financial institution.
So can we talk a little bit about crypto? I know it's not exactly, although Mercedes, you've made some investments in that space or adjacent to that space. And have you looked at that? Do you look at it differently now? Like since we're in crypto winter now, the FTX collapse, although I know that's not really a crypto company story, so to speak. But I mean, how are you seeing crypto in relation to fintech now?
I originally got interested in it because my thesis is all about what helps consumers build wealth, and I was thinking of it originally as a different asset class that allows people to invest. I invest, once again, in Latin America, Argentina, Brazil, Colombia, Mexico. I have investments in all of these countries, and there it was a store of value. It's a currency alternative to a government that had currency controls. In Argentina, for example, you can exchange more than $200 per month into from peso to USD, and so and take it out of the country. So if you have currency caps like that, then obviously it makes it hard to live a life, to go to university, to buy a business or buy a cow in a different country. I don't know what you want to do, but the thing is, these are actually alternatives that have real utility. And so I still think where I have belief in a lot of blockchain-based services are in two areas. One, in terms of the utility of alternative to currency, and then two is the international payment method. I got married a little while ago abroad and was trying to send my payment. It was so difficult. And I'm like, this is 2022. How is this so difficult? And so I do think there's some benefit there, and I'm still pretty excited about that category.
I mean, is that a problem that can be solved by crypto, or is it more of like a fintech problem? Are there fintech companies that are centralized fintech companies working on that?
There are. I mean, there's cross-border international payment companies, and lots of folks are working on it. But I would say more solutions, the better.
Yeah, I mean, I think about it often in terms of more so like the underlying tech. It doesn't need to be like completely always branded as like this hot crypto company, but it can be the tech that's being used to move money or to execute whatever the goal is. I think where I usually have looked at crypto is around like there's clearly some sort of appetite in this space. I don't necessarily think it needs to be like the full Web 3.0 where everybody is going to be in that space where all money is going to be held in it. I personally don't think that everybody should be self-custodying their money because I think that's a recipe for disaster. But do I think there needs to be easier sort of rails between the space? And if that's going to happen, what are some of the frameworks around security, risk, identity that needs to exist in that space for it to play out well and properly? And so that's kind of how I view the space. And so it's a lot of kind of like the Web 2.5 and like honestly almost mimicking what we've built in our world and financial systems today.
We at Felicis, we tend to focus on platform companies and system of record companies. So the same thing within crypto. So where we have focused is looking at areas like tax. Crypto tax is interesting because you still have trading that's happening. We have an investment in a company called Themis that is a compliance platform for crypto. So crypto and fintech more broadly. So that's where I think there will be opportunities in the future. And then there are some really interesting blockchain applications as well in insurance that I think are very real. It's not an area where we're investing, but those opportunities are there.
One of the promises of crypto and fintech is that it can really help people who are like underrepresented groups, people who are, maybe in other countries where it's difficult to get access to services. I wonder if in the tough times right now that we're in, if that's like a stress test on that theory. Like we've seen the volatility, we've seen prices crash, interest rates are, higher. Do you still think that, or are you thinking about it any differently now?
There's actually crypto had a higher adoption by Black and Hispanic investors than most other groups on a proportional basis. And I think there's a propensity and proclivity to be interested in new alternative money sources that don't come with some of the stigma of the government, just to be frank, and also the idea of the opportunity that is there. So while maybe the timing, people might hear about it late, they might get in at the wrong time. That is not great, and education is always what I would want and hope for the consumers to really understand when to hold, when to sell. I do think that there is still potential for, being able to have a more independent source of funds, and in terms of thinking about taking their businesses global as well.
Yeah, I think that, and I don't necessarily think this has to do with a downturn, but I think that one of the benefits of fintech is being able to look at the traditional financial services ecosystem and see where it's failed and what we can build for people that feel like they've been left out of that ecosystem. And so, I think Cash App honestly kind of like stumbled into building a great platform for mainly Black Americans and a lot of people in the Southeast. That was not their initial target. They just built a platform that initially did not require you to have a bank account and be able to move money. And then as they did that, they figured out like, oh wait, there's a huge demographic that this works for, and then kind of continued to build their platform around that. And now we're actually building a bank for them as well. And so I think it's just, you continue to understand like, where have there been problems and where are there gaps in the market for people, and then you can build into that. And so I think that is a clear opportunity where you can kind of help solve issues for those who have been left out, and it doesn't necessarily have to only be during a downturn or upturn.
Yeah, and just one more point on that. I mean, Plaid put out a report recently that even within their ecosystem, when they look at fintech adoption, there is like 10, 15, sometimes 20% percentage points higher adoption by these underrepresented minority groups of fintech services. And so generally I have to look at the ecosystem, whether it's crypto or traditional fintech services, as being positive for underrepresented groups.
Yeah, we're running out of time, and I'm wondering if there are any questions from the audience, or I can just keep going, but keep going for now. Raise your hand if you do.
You're excited for Sam Altman.
Right, yeah, I'm sure.
We're the opening act for Sam. Sorry.
Sandwich Act?
At least we don't have to follow.
I know, yes. But yes, Alfred was the opening act for us, so that was good.
I wonder if we could just, like, on sort of segueing from that last question, if we could take a step back. I mean, you've all been involved in diversity efforts in tech, and obviously we have a long way to go. And, you know, I'd like to just like touch on that as an issue broadly. And I'm wondering if right now, in the moment that we're in with layoffs and their lean times, does it make the effort more difficult, or is it easier? Or how do you see it?
I think in tech, over the time that I've been at Felicis, which is about 4 years, I think there's been we were just looking at this data, an incredibly positive movement in terms of founders with diverse backgrounds. So for the Felicis portfolio, which is all technology companies, not just fintech, we went from about 5 years ago, about 20% of founders being of minority background, to in the most current fund, it's 40%. So, and it's just incredible when I think about the number of co-founders, where it is a really diverse population. So I think it's been moving in the right directions, especially in the last 4 years.
I have a curiosity question. You said you recently got married. For your payment, was it PayPal or a wire transfer?
I don't know if everyone heard the question, but
It was all the way down to a wire transfer.
Yeah.
Wow.
How did I pay for my wedding? With a wire transfer?
It was that antiquated.
Yes, charged me a lot. And some credit card payments.
I have a question about there's been some talk lately about quote unquote super apps, in the tech industry. In other parts of the world, Asia, there are these like payment focused super apps. Do you think anything like that could happen here?
I mean, it could. Has it? We don't have it in the way that other countries have it. We don't have WeChat. We don't have, a ride hailing plus a payment, like in Southeast Asia, Gojek, Grab, or like they have in different parts of Latin America, Mercado Pago, Rappi Pay. We don't have quite the commerce plus fintech for all services, plus the chat communication, plus the social networks. We could, maybe WeChat is the closest, or sorry, WhatsApp is the closest that we use in the US, but even that's not from the US, so.
I mean, yeah, people have tried, like Apple you can technically pay via iMessage, and I think Facebook has like some sort of, like they technically do exist, but just the usage is so much lower. And so I think, it kind of goes back to like, we're a lot further behind in terms of even like just a simple adoption of these types of platforms. So like, they're not necessarily investing into them in the way that they would.
I think we're behind just big picture, though. We're behind on those types, at least some of the consumer payments. But I would say the U.S. and other countries like Israel are very far ahead on fintech infrastructure, kind of the boring rails that makes fintech run, but definitely on the consumer side, no question.
Yeah, that's really interesting because I mean, I also wonder if the app stores, right, the control of Apple and Google, if that like limits it as well. I mean, it was. I don't know if you have a
Dicey
thought.
question.
Oh, okay. Nobody wants to piss those guys off. Got it. Well, do we have time for one last question, or are we pretty much? Yeah, that's the end. The end. That's what I thought. Thank you so much. This has been
Thank
really
you.
interesting.
Thank you.